Hello everybody, this is Matador again from freetradingvideos.com. It's 12:07 p.m. Eastern Standard Time, Thursday, December 17th, and we experienced that down gap like we talked about this morning. So here's a picture of the S&P ETF, the spiders, and a gap down into the 110.60 area. Hardly any retracement at all. If we drop a retracement line in here, didn't even quite make it to the 50-yard line, which would have been just shy of the 111 mark. And so let's remove that and remove this. So 111 would have been a nice retracement if we could have gotten it. 111.04 would have been perfect 50% retrace. So we're X% weaker on that retracement. Then we actually sold off to below the open of the day on some pretty good sized volume. It was a nice possibility there. Made a swing low, and I'll show you why in a minute. Came right back up into that resistance. So that support briefly, once broken at the swing low or the opening of the day, became resistance. Chopped around there for a while, broke that. That also became support later, again and again. Now that was resistance, and then we broke it again at 110.50. So we are now looking to hold up. Let me grab a horizontal line at the 110.30 mark, which has relevance. So let's go to a higher time frame and zoom out a little bit. So the 110.30 would be right here where we are now, and you can see why the 110 mark is support. So we're trying to hold up in this area right through here, and the perfect gap fill from this area would be 110 again. So 110, 111, and 112, all significant numbers, which is actually nice to have in our camp. The 60-minute chart shows it just a little bit differently, of course, but all the same numbers are relevant. We held up briefly at the 110.50 mark, like we talked about, for this swing low, and also the rising 200 MA without pre and post market data. So that was an important mark to actually break there on an sort of a longer intraday time frame. Let's take a look at the broad markets. If you look at the highest time frame on a daily chart, we'll look at the weekly in a minute, which would be, of course, higher for position trading. We're still in a beautiful high base, but testing this little gap back here. So not terrible. It's not a dramatic drop, but it is notable. And of course, on a weekly chart, we're just still consolidating beautifully. So drilling back down into an intraday time frame, let's take a look at the VIX. Grab this. There we are. And you can see that we are, again, testing our swing highs through here. So I remove that, and that's going to be an important area to watch, the 2209 area. So back up above the 22 mark, and that's important. So the next one, the trend. Zoom back in here. Trend is at 2.7, which is fairly dramatic. Some good volume flowing into stocks on the decline versus stocks on the increase. And the trend Q, still not matching, but also bearish by X% above 1.2 and rising a little bit. So a couple notable features here. The broad market internals are verifying what we're seeing here as a low base. So if we get a break to the downside, I would expect the perfect gap fill the 110 mark. If we do rally, make a higher swing low, watch out for 110.80. Perfect gap fill back to here, and of course the 111 intermediate. So good stuff, everybody. Hope you're having a great trading day so far, and D7 will be with you at the close to wrap it up.